Good morning. My name is Miguel Gonzalez, and I'm a certified retirement counselor with over 20 years of experience helping clients in retirement income planning, overseeing investment of funds, and designing retirement plans. This week, let's talk about what to do when inheriting money from loved ones. Inheriting comes with many emotions, from sadness to confusion to perhaps even joy or relief. An inheritance can take various forms, such as cash, property, stocks, bonds, or other assets. The person leaving the inheritance, the decedent, will likely specify how their wealth will be distributed through an estate plan or will. If there's no will or estate plan, the law of the state where the decedent lived can determine how the property will be divided. As a beneficiary, understanding what inheriting truly means is crucial. So here are some tips to help you navigate the process. One is understanding probate. First, it's essential to understand that receiving an inheritance may involve going through a legal process known as probate. Probate is a court-supervised process to distribute the decedent's estate to rightful beneficiaries. Sometimes, depending on state laws, small estates may not require probate. If the decedent left a will and an estate plan, the probate process may be simplified and move quickly. Number two, dealing with debt. The next step is dealing with inherited debts. Often beneficiaries worry that they might be responsible for their decedent's debts. However, you cannot inherit debt unless you were a co-signer or the debt was in your name. The estate is mainly responsible for paying off debts, not the heirs. And once the estate has paid off the deceased debts, the remaining inherited assets can pass to the beneficiaries. Number three is estate taxes. One of the most essential elements to consider is estate taxes. The decedent's estate may owe federal estate tax if its value exceeds the exempt amount set by law. So you typically do not owe estate tax as a beneficiary, but exemptions do exist. Some states levy an inheritance tax, which could impact your inheritance. Therefore, it is crucial to work with financial, legal, and tax professionals to understand the tax implications of inheriting before you make decisions about your inheritance. Number four, inheriting investment strategies. Learning the rules regarding inherited assets is essential if you inherit investments, like stocks or bonds. You need to determine the cost basis for these assets, which impacts the amount of capital gains tax you may owe if you sell them. Number five is getting financial advice. Getting financial and tax professionals to help you manage inherited investments is beneficial as cost basis calculations can be complex. As a beneficiary, you may face income tax implications if you inherit an individual retirement account, IRA, or other retirement accounts. Depending on the type of account, you may have to require minimum distributions, RMDs, and pay tax on those distributions. Therefore, you should consult with a tax professional to understand the tax implications of inherited investment strategies. But what if you inherit real estate? Well, there are some specific factors to consider when inheriting real estate. If the property comes with a mortgage, paying it may fall on the beneficiary. And depending on the circumstances, you might choose to live in the house, rent it out, or sell it. Each option has implications that need careful consideration. And record keeping is important. So lastly, your responsibilities as a beneficiary is to continue once the estate has settled. You should keep detailed records of every transaction related to your inheritance, such as sale documents, appraisals, tax returns, and other relevant paperwork. Detailed record keeping can help avoid potential disputes with other beneficiaries or tax authorities. So in conclusion, being a beneficiary can feel overwhelming, but knowing what to expect can remove a lot of the uncertainty. So by understanding the probate process, tax implications, and handling of various inherited assets, you can make well-informed decisions for your financial future. Once again, this is Miguel Gonzalez with Cortburg Retirement Advisors. Please take a moment to click the like icon, and don't forget to also subscribe to my YouTube channel to receive our weekly video podcast every Monday morning. Thank you for watching, and I will see you all next week.